Two tankers just took hits in the Strait of Hormuz. Chip makers are getting sold for a second straight day. And in about 7 hours, the Fed hands Wall Street the only straight answer it's getting all week. That's Wednesday. Good morning. It's Wednesday, July 8th. I'm Nick Vertucci with Eleanor Whitfield and Marcus Brooks. Grab your coffee. We've got a scoreboard to settle, a chip trade that keeps getting stranger by the day, and 2 o'clock this afternoon looming over everything we're about to say.
Morning, Nick.
Morning. I already know how this opens.
You do.
Go ahead.
Scoreboard first. Eleanor, yesterday you gave us a level, not a vibe, for once. The 10-year under 4.5 into today's 2 p.m. minutes means dovish priced in. Above it means the market's already flinching.
I remember the terms.
It's sitting at 456 this morning, 1 month high.
So it broke above the line I drew.
By your own rule, that means the market's already flinching going into the release.
Then I'll take the win. Though I'd rather have been wrong and woken up to a calmer tape. Rising yields on energy. Fear the morning of a Fed minutes release isn't a comfortable way to be right.
Careful, that's almost a full sentence of humility.
Don't get used to it.
Record now reads 2-1 for Eleanor. Streak flipped positive. Marcus, Micron above $1,000 at yesterday's close, or your 0-3 by breakfast.
Say it.
Last update we had, 1:33 Eastern yesterday, still had it down around 5% with no sign of a bid coming back. This morning's pre-market has it down another 5-6 on top of that.
Then it never found the floor. 0-3.
I'm not going to enjoy this the way you enjoyed mine.
You're allowed 30 seconds. I'll allow it.
I'll decline, actually. 3 losses in a row is a real pattern, not bad luck.
Noted, filed, moving on before I have to think about it further.
One more. Dave's debut call from the guest chair. SMH closes green, or we call the rebound noise. The chip gauge was down more than 3% by early afternoon yesterday. No recovery mentioned anywhere after that, and semis are leading the losers again this morning. Dave's not here to defend it, so I'll do it for him. 0-1. Welcome to the chair.
Rough first day at the office. And
At least he's got company now.
Full board. I'm 2-1. Marcus is 0-3. Dave's 0-1 right out of the gate. Sarah's still clean at 0 because she hasn't made a call yet. Rough couple of days for this panel's predictive powers. Let's earn it back. Eleanor, where does Tuesday actually leave us?
Messier than the Dow record headline suggests. Monday closed at a fresh high just above 53,000, S&P at 75.37, Nasdaq up over a point to 26,121. Tuesday gave a chunk of that straight back. S&P down about 0.5% to 75.0385, Nasdaq off better than 1% to 25.818, Dow easing a quarter point to 52.925.
a quarter point give back off a record high isn't messy, it's a normal Tuesday.
It's normal on the Dow. It's not normal underneath it. The semiconductor index fell more than 5% intraday. That's a sector getting hit hard enough to drag 2 major indexes lower on a day. The blue chip average barely moved.
Walk me through what actually did the damage.
Samsung reported a record quarter overnight, profit up roughly 19 times year over year, and the stock still fell about 10% in Seoul. That headline traveled straight across the Pacific. Micron, Western Digital, SanDisk all down in sympathy. The VanEck Semiconductor ETF off more than 3%. And on top of it, Reuters reported, China's DeepSeek has spent about a year quietly developing its own AI inference chip to cut its dependence on both Nvidia and Huawei.
And none of that money left the building, it rotated. Industrials, financials, healthcare, all picked up the slack yesterday. That's breadth doing its job, not capital fleeing equities.
Rotation is the polite word for it. The VIX ticked up to just under 16 on the day, and it's at 1636 this morning. Not panic, but not nothing either, heading into a 2 p.m. catalyst.
Give me the sector scoreboard in 10 seconds. Who actually caught the money that left chips?
Industrials and financials led, healthcare and utilities got a defensive bid, energy lagged despite firmer crude. Pretty textbook rotation map if you're grading it on form.
Which is exactly why I don't love calling it damage. Damage implies the money's gone. It's not gone, it just found a new address for a few days.
So, record close, real weakness underneath it. Money moving sideways rather than out. Hold that thought, because it's basically the whole show today. Let's go straight at the fight you two are actually having, since it didn't get settled yesterday, and it isn't getting settled this morning either.
Fine by me. A company posts the best quarter in its history and the stock gets sold. 19 times the profit, third straight record quarter, and Samsung still fell 10%. SK Hynix followed it down 8 to 10%, the Kospi lost 7.5%. You don't sell a beat like that because you're worried about nothing. The market's pricing the capex and demand questions sitting on top of the number, not the number itself.
Or, the stock had already priced in most of that beat before it printed, and record profit, stock down, is a sell the news reflex that happens every earnings season on record. It doesn't mean the thesis broke overnight.
Then explain the DeepSeek headline landing on the same day. A major Chinese AI lab spending a year building its own silicon specifically to need less Nvidia and less Huawei. That's a real, if slow-moving, threat to the pricing power this whole trade depends on.
It's years away from mattering, and everybody in this room knows it. No tape out, no timeline, no confirmed fab partner. It's a headline that's true and irrelevant to this quarter's numbers at the same time.
Eleanor, give me something concrete, not a mood. What actually changes your mind here?
An actual capex guidance cut from Samsung or SK Hynix in writing, not a stock chart reacting to a headline. Right now, I have one price move standing in for a fundamental change I haven't seen documented anywhere.
Marcus, same question.
SK Hynix's book gets priced at the bottom of its range Thursday, or has to be cut again from where it already sits. That's real institutional capital voting, not a tape reading tea leaves.
That's the same tiebreak you two named yesterday, and neither one of you has moved an inch.
No, and I'll say it again, I don't think we get there before Friday's debut either.
Then that's officially the split, 2 days running. SK Hynix prices strong Thursday and SKHY opens well Friday. Marcus is right, and this is rotation. The book gets cut again. Eleanor's right, and this is the crack finally showing. Watch Thursday afternoon.
Devil's advocate though, since Nick loves making me do this, let me steal in Eleanor's case for a second. If DeepSeek's chip effort is real enough that Chinese hyperscalers actually start diversifying away from Nvidia exports over the next couple of years, that's not nothing for the export control dependent part of this growth story. I just argue that's a 2028 problem being traded like a Wednesday problem.
I'll take the concession on the timeline. I still think the market's right to start pricing optionality on it now rather than waiting for the tape out.
One more angle before we move on. Is there a version of this where you're both right, just on different clocks?
Probably. Short term, Marcus's rotation story explains today's tape better than mine does. Longer term, I think the structural questions I'm raising are the ones that actually matter for where this trade is in 2 years.
I can live with that framing. I'd just add, 2 years is a long time to sit out a supercycle waiting for a crack that hasn't shown up in the numbers yet.
And that's the whole disagreement in one sentence, really.
Progress, of a sort. Quick human moment before we get back into it. I went back to that pour-over place from yesterday.
The 14-minute hostage situation.
The same one. 12 minutes, 40 seconds today. I brought a stopwatch.
You brought a stopwatch to a coffee shop.
I have priorities. I'm choosing to read that as a bullish trend line.
That's 2 data points, Nick. I'm not calling a trend on 2 data points.
Fair. Noted. Back to the tape. SpaceX joined the Nasdaq 100 yesterday, and this is a stranger story than the one-day pop makes it look.
15 trading days after the IPO, fastest index entry in the benchmark's history, using the new fast entry rule Nasdaq rolled out back in May. Shares traded in a 152 to 161 range yesterday, roughly 30% off the post-IPO peak, but still comfortably above the IPO price.
Translate the mechanics for anyone who doesn't live in index land. Why does simply joining an index move a $2 trillion company's stock at all?
Because most money in index funds isn't picking stocks, it's replicating a list. The moment a name gets added, every fund tracking that index is mechanically required to buy it on a set timeline, no opinion required. JP Morgan pegs the Nasdaq 100 at alone at $4.3 billion, with total passive flows potentially near $27 billion once the Russell trackers rebalance too.
Which is exactly what should make people uncomfortable rather than excited. Only 3 to 5% of SpaceX's shares are actually tradable. Billions in mechanical, price-agnostic buying landing on that thin afloat isn't a market forming a view, it's plumbing, forcing an outcome regardless of anyone's view, including the retirement accounts now required to own it.
I'd call that a feature for existing holders, not a bug. A permanent layer of passive demand that never voluntarily sells is a demand floor almost no newly public company gets. Reusable orbital launch plus a Starlink recurring revenue base is a real moat. The index mechanics just lock in a tailwind on top of it.
Until the lockups start, insiders begin releasing shares in tranches from late August through late October. The same thin float that amplified yesterday's gains amplifies the drawdown, the moment real supply hits a market that's already proven how shallow it is. Facebook lost 40% of its value into its float expansion back in 2012. That's not a hypothetical, that's precedent.
It's also not a today problem, and today the mechanical bid is real money in the price.
Does this change how the S&P handles its own next megacap listing? Or is this a Nasdaq-only story?
That's actually the bigger read-through. If the S&P Index Committee feels pressure to adopt its own fast-track provision, this stops being a one-off SpaceX story and becomes the new normal for every trillion-dollar NUCO going forward.
Which is one more reason I'd want investors to actually understand what they own before the next one of these happens, rather than finding out after the fact that a chunk of their retirement account just got force-fed into a company they never evaluated.
So the bull case is a permanent buyer nobody chose, and the bear case is that same buyer's counterpart. Sellers nobody can stop in about 8 weeks. Both of those could be true at once, which is sort of the point. Let's turn to the thing actually driving the tape this afternoon. Eleanor, set up 2 o'clock for us.
The Fed releases minutes from the June meeting at 2 p.m. Eastern, the first gathering run entirely under Chair Warsh. His statement that day ran about 130 words, roughly half the length of what we're used to, and it dropped the easing bias language that had survived 3 straight meetings. He also didn't submit his own dot to the plot, even while encouraging the rest of the committee too.
Which is either careful neutrality or he genuinely hasn't decided, and I don't think we find out which today.
We find out more than you'd think. 9 of 18 participants now see at least one hike by year-end, up from a split committee back in March. The median projection jumped to 3.8 from 3.4. When a chair withholds his own signal, the transcript of the room becomes the only real primary source we get. That's not a formality release, that's the main event.
Give the audience the plain version, what's actually different about minutes versus the statement we already got in June.
The statement is 2 paragraphs everyone agreed to. The minutes show the actual argument, who dissented, how they framed the inflation risk, whether a September hike got real airtime in the room. It's the difference between a press release and the meeting notes.
And futures still aren't pricing hike risk for July itself, better than 3 and 4 odds on a hold this month, last I checked. Whatever's in these minutes is about tone into September, not action in 2 weeks.
So today's about reading intent, not expecting a headline that moves markets on its own.
Exactly that, which is why I'd watch the 10-year first, not the wire headlines. It's already told you the market's leaning hawkish before a word of the minutes is public.
What's the actual language you two will be scanning for at 2 o'clock, word for word?
Any mention of dissent on the inflation outlook specifically, not just some participants, but how many and how sharply they broke from the median. That tells you whether 9 hikes by year-end is a soft majority or a hardening one.
I'm watching for anything on the labor side getting more attention than the June statement let on. If 2 or 3 participants flag softening employment as a reason to hold off, that's the dovish counterweight nobody's pricing right now.
So it's not really hawkish versus dovish today. It's which minority report gets more ink.
That's a good way to put it, actually.
Let's close the loop on the rest of the morning because there's real news before 2 o'clock even matters. Small caps are actually the quiet story today. Russell futures are barely moving near 3,000, but that index is up more than 21% year to date, its best start since 1991.
That's the rotation thesis again, just on a longer clock. Capital's been leaking out of the most concentrated mega cap AI names into everything else all year, not just this week.
I'd call it a healthier market underneath a scary-looking headline number, and I don't say that about many things this week.
Crude's carrying a bid. Tuesday, Brent settled up 3% to 74.16 WT. I up 2.8 to 70.044 after a tanker and an LNG carrier both took projectile hits transiting the Strait of Hormuz. It's up again this morning on the same story.
And that's not nothing for the inflation debate landing on the Fed's desk this afternoon. Energy-driven inflation fear feeding into a hawkish-leaning minutes release is a genuinely bad combination if you're the bull case on multiples.
Which is why I'd watch it as one leg of a bigger cross-asset story. Yields climbing, a firmer dollar, softer Bitcoin this morning. When multiple asset classes lean the same direction at once, that signal carries more weight than any one of them alone.
Softer Bitcoin is one morning, not a trend. It pushed near 64,000 as recently as Monday on continued ETF inflows. I'm not reading one soft print as the inflow story reversing.
I didn't say it reversed. I said it's one leg of the same inflation fear story pulling on every risk asset at once this morning, Bitcoin included. You can hold both of those.
I'll allow that version.
On the calendar today, Levi Strauss reports before the bell, an early read on consumer demand and tariff pass-through into the back half of the year. And Crinetics Pharmaceuticals is up something like 99% pre-market on a confirmed all-cash buyout from Vertex at $85 a share.
Small cap biotech M&A staying active while chips wobble is actually a decent tell. Deal making doesn't usually accelerate into a risk-off environment. Somebody's still writing big checks.
One data point. I'd want to see it repeat before I call the small cap M&A window wide open.
All right, closing calls. Checkable by tomorrow's show. Not eventually. Eleanor, you're up.
The 10-year, again, because it's the cleanest read we've got. If it's still above 460 by tomorrow morning, after the minutes have had a full day to digest, that's confirmation. The market's bracing for a real September hike debate. Back under 450, and today's spike was just pre-release nerves.
Marcus, after 3 losses, I assume you're either doubling down or getting conservative.
Doubling down on purpose. Micron closes green today, first green session of the week, minutes or no minutes. If chip buyers show up even once before Friday, that tells you more about where the floor is than another sell-off would.
Bold, given where you're sitting. So here's today. Watch 2 o'clock first, obviously, but watch the 10-year going into it, because Eleanor's read says it's already telling you which way this leans. Watch Micron for a bounce that hasn't shown up all week. And file away Thursday afternoon for the SK Hynix pricing that's going to settle a fight. These two still haven't settled themselves.
We'll get there.
Eventually.
If the show helps, follow Nova Ventures Daily wherever you get your podcasts. And catch our daily charts and reels on Instagram at NovaVentures_US. That's your Nova Ventures morning brief. Have a great Wednesday, and we'll see you tomorrow.